What is going on, crypto peeps? Good Friday to you. Literally a good Friday, since today is Good Friday. Let's jump right into it. So here's the Bitcoin chart. We're kind of in this limbo pattern here with this last candle. We have, about 7 or 8 hours left until this candle closes. So we don't quite know what's going to happen yet, but we can take a look at the other indicators to kind of give us a guide of what's going to happen. First of all, Bitcoin has been trading in this sideways pattern since really the beginning of February. And I know that it seems like we've been down. We've been on a steady downtrend. However, if you look at this, this 20K level here, if you look at this as an outlier, then you'll notice that we've actually been trading sideways. Yeah, we're down from the 20K all-time high, and that does kind of suck because obviously we want the prices to go up. However, this is the longest pattern of sideways trading that Bitcoin has spent at these price levels, meaning this is the most valuable that Bitcoin has been for this length of time, right? So we're almost at 2 months running in this sideways pattern. You see here that we drew the major support line at around 6,800, which we hit back in February 5th and 6th, right? I draw my trend lines at the candle bodies. Some people use the wicks. You will get slightly different results depending on what you use. At least be consistent no matter what you use, right? And make sure that it's part of your analysis. So if you're using the bodies, stick to the bodies. If you're using the wicks, stick to the wicks. In this case, I'm using the bodies based on personal preference and years of experience, especially with regards to stocks. I feel like bodies are more accurate. You might have a different outlook on it. So with that said, if we're using the candle bodies, you'll see that now this most recent day candle, today's candle, we are dipping below that major support of 6,800. Currently, we're at 6,700. Now, back here, it's not like we haven't been below 6,800, right? Like you'll see the low on this candle is 6,000, which consists of that long wick. So we can still close above the major support. It's just that currently we are under that. So we have to take a look at the other indicators in order to give us a sense of what's going on. If we take a look at the MACD, you'll see that the 12 is now converged with the 26, but now is diverging away from that towards a bottom trend, towards a downtrend. But what's interesting is the histogram, which are these red lines here beneath the moving averages of the MACD, doesn't show a large amount of sell-offs, right? So you'll see here, after that bull rally that took us to 20K, you'll see a bunch of sell-offs, right? People were selling their positions because they were booking profits. We don't really see that here. So there isn't much to indicate in terms of selling momentum that would support a further downtrend, even though the MACD, we would like to see this 12, this blue line, converge and start rising again. And until we see that, I don't think we are in the clear. Looking at the RSI, we are actually now past the oversold level just slightly, right? If we zoom into this, you'll see that we dip below that just a bit. Now, again, this day candle has, about 7 or 8 hours left to close. So this can change, but and I've said this before in other videos, in previous years, we've never hit an oversold level with Bitcoin on the day chart and haven't then returned back to an overbought level. This would be the first time, if we remain at this oversold level, this would be the first time in years that we hit an oversold level, went back to a normal range, and then back to an oversold level before hitting an overbought level, right? And that signifies a loss in momentum, obviously. So it looks like we still have quite a bit to go. That we still have a little bit more to go in order to hit the oversold level. What next indicator we'll use is the VIX fix. I'll do a separate video on this, but in general, this is a measure of volatility. And actually, if we go to this page right here, I love looking at this, but this is bitvol.info. It's basically a measure of volatility of Bitcoin. We see that the volatility has gone up. This was at around, I think, 4.7 or 4.8 just a few days ago. Volatility has gone up. And the reason it has gone up is because we are now nearing a price range that we haven't seen since the beginning of February. So we are now hitting outlier pricing, which means that the volatility is going up. And you could see if we turn on something like the Bollinger Bands, I'll turn off the moving averages for a second. You'll see that let me hide this real quick. You'll see that we are now trading outside of the bottom range of the Bollinger Bands, meaning we are that far away from the mean, which is this red line. So that supports, you know, the reasoning why the volatility is up. And with volatility being up, usually with the VIX fix, we'll see that as the volatility increases, the price decreases, right? So you'll see here that the volatility was at its peak and the price was at its most recent bottom. And you'll see that pattern repeated over and over. So as this VIX increases, this volatility index measure increases, the price goes down. So it looks like we still have a bit to go. If you look at the longs versus shorts, which is this white line right here, you'll see I'll post a video that I did explaining this this indicator, but this is basically a measure of longs divided by shorts. The lower it is, the more shorts there are, the higher it is, the more longs there are, right? So we could see that the shorts are increasing, which is not a good sign. It does usually indicate that we will see a further price decline. The one thing that you probably have heard, if you've been watching other people's videos, you've heard of something called the death cross. This is the 50-day moving average here, this blue line right here. The yellow line is the 200-day moving average. Once they cross, and if the 50 goes below, it's almost kind of like the MACD, right? Because the MACD is just a measure of two moving averages. So if the 50 falls below the 200, converges and then starts diverging away towards a downtrend, then that traditionally that is a point for major selling off, right? So when that happens, we see in other markets traditionally that is a point where people start dumping the security itself, right? Out of panic, out of fear. And this is, we've already converged, and we have to see how far we diverge away, how far the 50 diverges away from the 200. We have seen it in the past, and unfortunately it has lasted a long time in the past. So we've seen two scenarios in the past. We've seen where Bitcoin has, you know, we've just been shy of converging, right? Where the 50 and the 200 have flirted with converging, but haven't, and then broke away. And we've also seen where they have converged and the 50 actually fell below the 200. And that has lasted quite a bit of time. Most notably between 2014 and 2015, that lasted almost a full year where the 50 was under the 200. And we saw a period of stagnation. Like it was within a very tight price range for almost a year. So let's hope that's not the case. And that we can, you know, actually see a trend reversal soon. But based on these indicators right here, based on the fact that we have a little bit more to go in the RSI, based on the fact that the volatility can actually increase even more, based on the fact that we now are seeing more shorts coming in, I am willing to venture out and say that we might see a further price decline, just slightly. I don't know that we'll crash all the way down to 5 or 4. Certainly the market has a way of surprising you, as I said before. For instance, with the death cross, the 50 and the 200, that's lasted a year prior when it has happened between 2014 and 2015. So the market does have a way of proving your trends wrong, or at least breaking the trends that you've currently seen. If we hit oversold here again, you know, as I said before, this would be the first time in years that we went from oversold back to oversold without hitting overbought again. So, you know, it doesn't look optimistic in the short term, but I think in the long term we will be fine. We might actually stick to this trading range for a long time. So between this major resistance and this major support, this might be the new normal. And I've used that term before, the new normal, because this right here is an outlier. This doesn't represent any kind of normalcy, right? This represents people FOMOing into BTC, people who aren't traditionally traders, who might not even be interested in crypto, who might not even know anything about crypto or Bitcoin, right? They just hear the term Bitcoin in the news and decide that they, you know, it's Christmas time and they want to make some money and participate in it too, and tell their friends that they've, you know, bought some Bitcoin. So this doesn't represent a majority of traders here. This is an outlier, right? So if this becomes the new normal, again, as I said before, this is the longest period of trading that Bitcoin has been at these high price levels. Previous periods of sideways trading, we've been at between the $1,000 and $2,000 level, or between the $200 and $300 level. But between the 11,500 and 6,800 level, I mean, that it is a wide range, but that is the most valuable. That is the longest length of time that Bitcoin has been at these high price ranges. So that is one optimistic sign. Unfortunately, I do think we will see a little bit of a further decline from 6,700. Stay tuned here for sure, because we will let you know when we see those reversal signs, if and when the market presents them to us. Let's close out by taking a look at coin market cap. You'll see that the market cap currently is at 255 billion. And as this goes down, you'll notice that Bitcoin dominance increases. People become less and less interested in alts and in fringe alts and in projects that aren't really proven, right? And you see that foretold here with this Bitcoin dominance number. Ethereum continues to lose a ton of steam at minus 28% over 7 days, although Bitcoin Cash has now surpassed it, and Litecoin is now up to similar levels as Ethereum in terms of percentage loss over the last 7 days. All right, guys, that is it for the video. Subscribe here, hit that notification bell, leave a comment, join the Discord, sign up to the Patreon for the trade alerts. Stay safe out there. Have a good Easter if that is something that you celebrate. Peace.